The real estate market has been picking up across the GTA this spring 2023, and Etobicoke has been no exception. Welcome to the first of my Etobicoke-specific monthly market updates where I'll be going over market stats for all residential property types across Etobicoke. If you don't know me, my name is Jonathan Lee, and I'm an Etobicoke-based real estate agent. If you want to see more Etobicoke-specific content, click on the subscribe button. I plan on dropping not just market and property tours, but also Etobicoke-specific videos that you can use to explore the borough a bit more, or perhaps decide whether you want to move into the neighborhood or not. The Toronto Real Estate Board splits Etobicoke up into these 5 sections seen on this map right here, and I'll be reporting stats on these allocated areas. W8 covers a pretty wide cross-section of Etobicoke with a wide variety of neighborhoods, so month to month it will have the most freehold sales and see a variance in average price just based on the number and types of homes that come on the market. The other areas are pretty well defined. W10 is pretty similar in size geographically to W8, but also has a high density of industrial and commercial properties, as you can see with all these sort of beigeish sections here. April 2023 saw 161 freehold sales and 235 freehold listings come onto the market. The average price for all of Etobicoke ended up being $1.5 million for all freehold homes, with an average 12.8 days on market. The sales to new listings ratio crept up to 69%. Sales to new listings ratio is pretty much just the total number of sales divided by the total number of listings for a specific month or market period. Now, these sales could have occurred for listings that had come out in March or February, but didn't transact until this past April. So it's possible for the sales to new listings ratio to be above 100%, but as the number creeps up higher, it's a pretty clear indication that the market is creeping up, at least with respect to the number of active buyers that exist on the market. Looking at it by area, you can see the highest sales to new listings ratio is actually in North Etobicoke W10 area, being at 80%. A big reason for that is this is the most affordable area in Etobicoke where you can still buy a freehold home for around $1 million. I'd say in terms of affordability, the next area is probably W9, and it also has a very high sales to new listings ratio with only 11 days on market, but the other areas aren't far behind. Now, one question I often get is the average price is really high. Is this what I need to afford to be able to buy a freehold home in Etobicoke? And the answer to that is no. This includes the entry-level price point for a home in Etobicoke, which is predominantly detached homes, but also includes townhouses and semi-detached, as well as all new build homes, which generally start closer to $2 million and go up. At $1.5 million at this point in time, you're likely purchasing a renovated 1950s or 1960s era home in central Etobicoke, which is a pretty nice home. The entry-level price point for a non-renovated 1950s, 60s era freehold home in Etobicoke is right around 1.2 to 1.3 million. Now, the condo market is also seeing some pickup, though not to the same degree as a freehold market. There were 185 sales in Etobicoke this past month and 355 new listings, with an average condo price of $708,000 and a sales to new listings ratio of 52%, well below the 69% in the freehold market. And it's also reflected here with the average days on market being about 17.3 days. W6, which includes Mimico and Humber Bay, has the highest average price, but also tends to be closer to the lake, resulting in some really great views, and have newer condo buildings which generally attract more buyers. I'm going to hover on this slide for about 2 seconds so anyone that wants to pause the video and study the numbers in their market area a bit more closely has the chance to do so. Now, I want to go into sales to new listings ratio in a little bit more detail just to show you the momentum that the market actually has and how quickly it's changed over the past 3 months. As I mentioned, the higher it becomes to 1 or 100%, the more of a seller market it becomes. However, truthfully, it will never reach 100% fully because it's very common for homes to be relisted multiple times. Sometimes an offer date doesn't go quite as well as the sellers expected, and they relist at a higher price. Between February and March in both the freehold and condo markets, we saw double-digit sales to new listings ratio growth, suggesting that the number of buyers is far outpacing the number of sellers that are coming to the market. And the market is only built on that in the past month of April, though obviously in the condo market, you can see that growth has not been as aggressive. This big delta between February and March is mostly due to the confidence that buyers are now feeling in the market, partially due to economic security, that interest rates are unlikely to rise further, potentially that their jobs are secure, but also the fact that the need to move hasn't gone away. Between March and April, the fact that freehold homes has far outpaced the growth of condos leans more towards the hunch that the biggest submarket right now in Etobicoke is the upsizer market, moving from a condo into a house. The downsizing market from moving into a house into a condo, I find, is a much smaller subsection and doesn't happen as frequently, as a lot of freehold homeowners in Etobicoke live in bungalows, which tend to work for all stages of life. Again, another call out right here is just showing that W10 North Etobicoke has one of the highest sales to new listings ratio month over month from February to April in the freehold submarket. And I just also want to show that W7, while being 1.5, has a pretty small subsection. These are basically a small selection of new condo builds that were recently sold along the Queensway. Now, some key takeaways I want to mention about the Etobicoke market. Semi-detached and townhouses, they are the hottest freehold segments. There were less than 20 properties that came in March and 20 in April that came onto the market, and they all ended up selling. A lot of that is due to the upsizer market. It's really hard to get into a freehold property, and semi-detached and townhouses, as you can guess, tend to be a bit more affordable than detached houses. But there is not a high percentage of semis or detached houses in the market in general. So if you see a property come onto the market, seize the opportunity, because you don't know if there's going to be another chance, especially as the market slows down due to seasonality in the summer. The next big takeaway is all livable freehold price points under 2 million are seeing high turnover, whereas previously in March, only homes up to about 1.5 million were seeing that high turnover. So we're really seeing the market pick up in these larger 4-bedroom or executive style or luxury housing submarkets. And lastly, that the condo market turnover has not increased to the same degree, but it is seeing some modest appreciation in prices between 1 to 2% month over month, depending on the property styles. What I'm seeing is a 1+1 and 2-bedroom condo styles is seeing the most activity, while the 3+ bedroom styles, which will usually attract downsizers or larger families, they're not seeing as much market growth, but they are still moving. So one last thing for this market update that I want to show is a seasonality map of unit sales per month in all of Toronto. So this is both freehold and condo sales in the entire 416. Now I do the entire 416 because you need a lot of data points to really show the seasonality year over year. The number of sales in Etobicoke just aren't large enough to show the seasonality quite as clearly. By the end of May, we'll most certainly have surpassed the unit sales per month of year over year sales from May of 2022. And barring some unforeseen market circumstances, I expect that trend to continue for the rest of 2023. All these sales points being higher than the rest of 2022. Now, if you've seen any of my content before, you know that there are two main markets, the spring market and the fall market. And generally the spring market is a bit more defined, has a higher peak, while things come down in the summer and then rise again going into October, November. However, I think that the spring market will be lower compared to the fall market of 2023. So we'll probably be seeing a curve or graph that's a little bit inverse compared to years 2018 and 2019. And I expect the summer months to be somewhat high or maybe slightly higher than those previous years as well, as there's a lot of buyers who didn't end up buying this past fall of 2022 who will be looking to re-enter the market in the latter half of this year and try to get in before interest rates start to drop again, potentially in early 2024. So that's it for me. If you want to schedule a chat, the easiest way will be by clicking on the Calendly link below, or you can shoot me a text or call me through my direct line at 647-983-0770. I'll see you guys on the next one.